Good morning, it's Jeffrey Cohen, Chicago Quantum. We took some time off from our videos last week as we focused much more diligently on our money management, our paper trading of our new hedge fund or managed accounts, and we're doing really well on those. And so I realized that the things that now I think about with the markets are different than what I thought about a few weeks ago. When you're picking individual stocks and you're trying to make a buck, it's very different than when you're trying to manage money, manage risk, and think through things like transaction costs and hedging and how to define success. So very, very different. So today, what do we see in the market? This is where it gets interesting. The spider is trading at 408, 4,082.50. Now, in a lot of the data sources that we look at, which are free, I don't like what I'm seeing, right? Because it said that it was trading at 4,100 or 4,110 or something like that. And I thought, I'm just not seeing it, right? And so I looked, again, free data sources. I look at Yahoo Finance, S&P 500 futures, and I realized this is delayed 10 minutes. 4085. Now we're at 4081. So why are they doing that? Why are they really delayed? And then I looked at FinViz. I go to futures. And again, FinViz, I love FinViz. I use it all the time, right? But it's free. And I look at S&P 500, and if you're really focusing on the time, it says 8:53 a.m. and it shows it at 4103. I don't know that I saw it at 4103, and I've been watching the ticker all morning. So the futures for the S&P 500 are off. Now the VIX, probably the same issue. And so I'm thinking to myself, is it always this off? Second thing I noticed, so first off, the futures are a little higher. They're actually trading a little higher, but not much, right? What was the close on? Let's take a look. S&P 500. Yeah, we're on an upward trend. Closed around maybe 40.40. Let's see how it closed. It was around 40.60, 40.65. We're 40.85. So, and actually we're at 40.82. So it's up a little bit. I'll take it, right? But it's not up as much as you might think. And so I just think that's really interesting. So number one, free data sources are delayed this morning pretty significantly. The second thing I noticed, and unfortunately, I'm in the stocks that I own personally, not the ones that we have fund positions in. And just the spreads, right? So Verizon. Okay, it's less than a half hour before market open. You would think pre-market wouldn't be so bad. But to buy a 100-share lot, and there aren't many, 200 shares at 42.36, 100 shares, actually 150, at 42.50, that's a 14-cent spread. It's a lot. It's like 1/3%. That's not normal at least I don't feel like that's normal for a stock. I'm looking at Lakeland Financial as a potential entry today. Spread here for 100 shares is from 66.85 to 87.57. That's 21. That's a little under $21. It's a huge spread. What's going on? It's Monday morning. It's not like the summer anymore. It's September 12th. And yet spreads are tremendous. We look at Corbis, which I know is a sack of shit biotech, but even this one here at 21 cents, 22 cents, that's a 1 cent spread on a 20-cent stock. That's 5%, right? QQQ, you got a 5-cent spread. 4-cent spread on the spider. IWM or the Russell, Looks like it's varying. It's a 4-cent spread. So spreads are high. Liquidity's low. Market data is delayed. I mean, where are we, right? Where are we and what's going on? And so we're going to take a look at the futures, even though I know they're delayed. And you see the stock futures are up. Bond futures are up. So bond futures up is like a big deal. And we have another source we can look at to double check that. But it says if interest rates are going down and then bonds are going up, it must mean people are optimistic about the inflation read, and people think that the Federal Reserve is going to stop raising interest rates, or at least slow it down. I think about that. Silver at almost $20 again. I mean, that's crazy talk, right? So lots of things going on. Oh, the dollar. The dollar is falling, which is good for stocks. The euro, we're at 101.35. The British pound is up 1%. The Japanese yen, I mean, 142 is still elevated, but it's a little less elevated. So it's interesting, right? Now, crude's up. I guess we have our inflation reading tomorrow, so crude can be up a little today. It doesn't matter. Gold up a little bit. Bitcoin, really surprising. It's back up to 22,000. It's up 10% from the support level. Looks like it took about 6 days for it to climb. Bitcoin at 22.3 is a real movement. It's a real move, okay? The VIX at 23.45. I have no reason to believe that's very off. So what that's saying is less money being spent on the downside protection. The dollar's weakening. That's good for corporations like 3M. By the way, we should be looking at 3M right now. We are not, but let's throw it up on the tape here. Very interesting. The spread, though, is tremendous. The spread on 3M is 123.10 to 124 for a 100-share round lot. That's a 90-cent spread. It's less than 1%. I guess you could say it's no big deal, but that's a big spread for 3M. And we talked this week about some of the risks, some of the perils of 3M. They're real, right? It's what else we got? What do I want to talk about? I mean, I wasn't going to make a video, but I decided to do it. So we're going to take a look. So this whole thing about Ukraine and Russia, Ukraine has really grabbed a lot of territory. This was the chart I liked the most. I don't know that this is true. I have not verified the chart, but it just shows you that as of the 6th, with the Ukrainian counteroffensive, they were attacking around Kharkiv to Izium. They were attacking north of Klinov. They were attacking down here in the south. So what happened is they made very, very little progress in these areas. A little, doesn't hurt. But they really made a lot of progress in the north. The north and the east. And this right here is like the Luhansk and Donetsk, those areas. You're basically taking back almost all the area that Russia took in the war. So you're still going to have to hit south, but it's a lot of progress. And so what they're talking about with the pictures is the speed of the advance, the amount of equipment, the amount of weapons and material that they've captured, the fact that Russian soldiers have dressed as civilians and are running away. We don't expect Russia to act like that. That should be bullish for stocks. That's at least that makes me feel good. Good for stocks. Just look at the pre-market. Again, I don't know how delayed these are. This is where I struggle, right? So they're saying the level is 4103.75. And we're at 408.51. So there is a systematic delay. So fair value is 40.8360. We're at 40.8510. You're at fair value. I don't understand. Why is this such a... Why are we so off? It could be that the spider is trading off. But that's... I don't know that I trust anything pre-market today. So, I guess I want to leave you with this. Yeah, what can I show you? We updated our posting about our market test of the Chicago Quantum net score portfolio. We updated this last night, probably worth talking about. Today will be a calm day for the model. And maybe that's why we see very little liquidity in the market, because we're not the only model, right? And there's big players out there doing similar trading strategies. We know we're the smallest fish in that ocean right there. We're a plankton. But what we see in the market is going to be relevant for what others see in the market. So, on Friday, it was crazy. We executed many transactions in the first 4 minutes of trading. I want to say it was like 17 different transactions. And we had to hedge everything against the spider. And in fact, we had to reduce our hedge against the spider. And so on Friday, it made a lot of sense. Tons of trading, buying and selling. And we had to buy the S&P 500. Again, we're small fish, but it's directionally very interesting. Heading into Monday, where are we? Why am I able to make a video with 15 minutes to go before market open? We will be adding one stock to our portfolio. We will be shorting 5 shares of the S&P 500. Actually, the ETF. So we're adding one stock, which is about $1,000. We just arbitrarily set our positions to about $1,000. And we have to short 5 shares of the S&P 500, which equals $2,000. And the reason is that our model has slightly less beta weighting from 1.9 to 1.8, and we beta weight our hedging. So interesting. So Monday, very efficient day for our model. But when you look more broadly at the market, stocks went up, which means we have to hedge more on Monday morning. Okay. That's where I think the market's headed. Now, the markets are green, right? Oh, look at how green this is. This is FinViz. But again, I don't know. And maybe I'm wrong. Maybe using the S&P 500 ETF is the wrong way to look at the S&P 500. But there's a major disconnect here. This is saying we're at 4101, and this is saying we're at 4085. I don't understand why the S&P 500 index ETF would be trading so differently than the S&P 500 futures. Maybe that's for another day, but we're not big enough right now with our paper trading of our fund to trade futures. So right now we just trade ETFs as our short. I look at the IWM at 188.44, which is 1884, and you look at the future, it says it's at 1897. 1898. So we're just off. We're off by like a little bit, right? Let's look at the NASDAQ. NASDAQ says it's up 0.4%. Yeah, it's strong, but it's, I don't know. So just interesting to note, we may have an issue here with ETF versus futures, which is fine. We look at the 10-year bond yield down. That's something actually worth looking at. How are our bond yields? So we look at the 30. We're going to pop up the 10. This matters to us because we have some trades that we like on the banks. And bond yields are relevant. So if we look at the 30-year, the 30-year is trading down about 2 basis points. The 10-year is down about 4 basis points. The 1-year Treasury bill is flat. So down 2 basis points for the 30, down 4 basis points for the 10, flat for the 1. And so that's interesting. That means your bonds are up. Long bonds are up. And so going back to this, it's probably okay that it's a little bit delayed. You can see the 30-year bonds are in fact green this morning. So some of our trades are based on yields rising and bonds falling. And so we have one of our large positions is based on that. We made a video, I want to say middle of last week, talking about that. And so when you see bonds going up, and by the way, mortgage-backed securities, same thing. When you see long bonds and you see mortgage-backed securities going up moderately stronger today for the mortgage-backed securities, this is, this is using Mortgage News Daily. Yeah, look at that. The 30-year fix is down below 6%. All right. So what does this mean for you? What does this mean for stocks? I don't know. To be perfectly honest, I can't tell you what it means. I see stale green in the indices. The indices are up. So I guess stocks are going to go up today. I see the VIX down, which is good for stocks. By the way, Asia, when I went to sleep last night, oh my God, was it up high. It was high, high, high. It was high as a kite. I was so shocked that the world indices were so much higher in Asia. Let's see how they ended. Yeah, up, up, up. All kinds of up. So, market looks good this morning, right? So if you're in the market, you're probably not eating lentils. You're probably eating steak tonight. Bonds are up. So if you're a fixed income investor, if you're a corporate fixed income investor, your bonds are probably going up today. That's terrific. The dollar's weakening. So if you're an investor in global U.S. firms that make a lot of their money overseas and have to convert their overseas earnings, looking good. So 3M, probably looking good today because of the dollar. So yeah, looks great. Looks positive. Looks life-affirming. Looks like our model's probably going to make money today. I just hope you guys make money today. Oh, Jesus Christ. Big yawn. By the way, Bears won. Bears won. The Bears beat the San Francisco 49ers. Yeah, love it. That was big news. And we wish you good luck in the markets. By the way, we're not paid to make the videos. So if you like the video, hit the subscribe button on YouTube. That lets YouTube know that you like the video and you like our videos. We're trusted. So they will recommend our videos, on the right-hand side where they say, next video. They recommend our videos. We don't advertise our videos. We don't advertise our business. We don't advertise our website. None of it. So if you want to learn more, or if you want to get in on the action, right now we are non-discretionary, so we do not take investors' money. But there will be a time when we will take investors' money as we paper trade our model and work through all the kinks, which is working, actually. I love it. In fact, I think today's the day that we pull the trigger and we re-engage our custodial firm to set up our managed account system. So, yeah, come to chicagoquantum.com. Of course, you have to look at our brochure. By the way, I'm legally obligated to tell you that. Please, read our brochure before you invest to learn all the fees, all the terms and conditions, how we work. We have a full brochure, and we have a threefold, one-pager front and back. Who knew? Who knew that we had all this information for you right here? Plus, we actually have a bunch of stuff for you. You can buy a run, which is how we actually trade our model, and you can kind of do your own model or do your own validation verification, both up run and down run. You also could look for some free research. We have our blog, Negative Beta Stocks, Top Dividend Stocks. We have our daily price variance research and development, which, by the way, spoiler alert, variance is up on money-losing stocks dramatically Friday. And we updated our list of foreign stocks. So if you wanted to know what are foreign stocks that are listed on U.S. exchanges, we believe we have a comprehensive list, the only list on the internet of U.S. listed stocks that are foreign companies or that operate and are headquartered in foreign domiciles. So you found it here. Check out the website. Hit the subscribe button. In fact, you could look at contact. You can give me a call. Say, hey, you're Jeffrey Cohen. I just want to learn more. Maybe I want to work for you. Maybe I want to invest money with you. Maybe I want to buy a run. Maybe I want to collaborate with you. Just go for it. Why not? I love this stuff. This is what I do for a living. So love to have you do it too. So thanks again for watching. Appreciate it. God bless you. Good luck in the markets. Stay safe. Bye-bye.